Super excited to be here today. And I'm going to sort of be presenting on this topic, something that has been super important to me. It's kind of a drum I've been beating for the past 3 years or so with research I've done across the CISOs that we work with and security teams, et cetera, that have helped kind of beta test this research and roll it out in production. And I'm going to start by saying some things that counter some conventional wisdom that I often hear security leaders and their teams say on a pretty consistent basis. And the first one of those that I really dislike is when I hear that cybersecurity is not a core competency. And the reason why I don't like that is because I fundamentally disagree with it. I think cybersecurity is a core competency. And a big part of what I'm going to do today is prove that to you. I'm going to give you some examples and some data that shows you why cybersecurity is a core competency. But one of the most important reasons why cybersecurity as a core competency is going to be dispelling another one of those notions I hear a lot of security folks say, which is that cybersecurity is a cost center. And it's not. It's absolutely not. Cybersecurity is not a cost center. It is, in fact, when you look at how this works today, cybersecurity is a profit center. And I don't mean that it's from selling cybersecurity services or becoming a cybersecurity vendor. No, not at all. I'm going to prove how it's a profit center throughout the rest of this presentation. That's what you're going to learn. And I'm also going to show you how you can apply this methodology in your own day-to-day life to take advantage of it. And then finally, I'm going to give you some metrics that you can actually use based on this to transform those budget cycles, those business cases, and those board meetings to prove how cybersecurity is actually making a meaningful contribution to revenue. All right, how? Well, it's actually pretty straightforward in terms of how this is happening. The first is that there's been a radical change in terms of what dictates cybersecurity strategy and actions today. We recently ran a survey, a kind of a pulse survey back in November, December timeframe of about 150 technology decision makers that had some responsibility for cybersecurity. And so when I say that the first reason why cybersecurity is a profit center, and one of the top reasons why cybersecurity needs to be a core competency, it's because today customers and partners demand it. They won't work with you if you aren't secure. It's just that simple. In fact, when we ran that pulse survey, here's what we found. 67% of respondents of those organizations said that the number one thing that dictated their security strategy, their security roadmap, and their security budgets were regulatory issues. That's kind of the monster that we've had under the bed for a while now, right? We know about that one. We've been responding to regulatory requirements forever. And if anything, those are getting more intense and more problematic. But the second and the third reason for cybersecurity strategies, for cybersecurity roadmaps, for cybersecurity budget actually came from two places that weren't even mentioned years ago. At number two, at 66%, so just 1% behind the other, was actually partner and supplier requirements. And the number three reason that was a primary input, primary externality into security budgets, roadmap, et cetera, were customer concerns. So customers now demand that we have a strong cybersecurity posture or they won't work with us. Our partners ask for the same thing. Now, of course, we've got a couple of other drivers that we know about. Number two, frankly, cyber insurers now require it, right? For us to have the right kind of insurance that we need, whether it's an umbrella policy or a dedicated carve-out, is that we've got to have a certain cybersecurity posture, right? We've got to have things like MFA or even better, phishing-resistant MFA. Those kinds of controls are important. We might need things like privileged identity management or privileged access management. We need a certain posture. We need a certain amount of maturity, or else cyber insurers won't give us policies either. They require it. And of course, I mentioned number three that we're all used to, lawmakers mandate it. Doesn't matter what jurisdiction you're in. This is what I call the era of regulatory FOMO, right? If there's a government agency or entity that doesn't have a cybersecurity regulation, they're writing one because their cousins have one, their friends have one, their fellows and other governmental departments have one. And of course, most of these don't make a whole lot of sense, right? They're not necessarily congruent with each other. There's not a lot of overlap. So we know about that one. We've had that one forever. And to some extent, we've been responding to it. But now we've elevated what these other items are. Well, if our customers demand, if our partners demand us to have a certain cybersecurity posture, that means that now we are directly contributing to how our firm makes money. We are responsible for revenue generation. We are responsible for profit as a part of that revenue that we generate because we are really a factor in the broader business today, right? Which is not something we've ever been able to point to in the past. In fact, one of the anecdotes I often share with security leaders is that if you actually want to overhaul your security program, if you want to get everyone to take cybersecurity seriously, I have the answer for you. Sign a really big deal with a bank. Because once a bank becomes your customer, you get to overhaul everything that you're doing from a cybersecurity perspective. Because why? Because they demand it. But now that's spread out. That's diffused through the rest of the industry where this is happening in every single vertical out there. And it's not just B2B companies. If you're a B2C company, as I mentioned, your suppliers and partners are also going to require this of you. So you've got to lean into that as a cybersecurity program. You've got to think about the fact that cybersecurity is now directly a part of your lead to revenue generation process because it impacts deal flow. Your cybersecurity practices can be responsible for hindering or outright preventing deals from closing with potential prospects and customers. Of course, you're not going to recoup costs related to breaches or other cyber insurance issues if you've got some sort of security flaw that allows your cyber insurer to escape paying for that. So you're going to have resistance to claims or litigation between you and your insurer to avoid paying those claims as a result. So that's another risk. That's another cost that's being created for the business as a result of not having a strong security posture, right? Flipping that cost center thing on its head. Remember, we're not a cost center because we've got to pay for cybersecurity, right? We're a profit center, but if you don't have the right cybersecurity posture, it can result in unanticipated cost. It's a different message. And then think about the world of protectionism that we're in from a global perspective, right? Barring current events today, from a US perspective, the world is more protectionist from an economic standpoint than it's ever been before. And this is true. It doesn't matter if we're talking Europe, Asia Pacific, the United States, it doesn't matter. We are in a protectionist world. And if you fail to meet regulatory requirements to enter certain markets, it rules out market access for you. Your company can't expand the way that it wants to because it can't meet the regulatory requirements of an area that it wants to move into for more growth, for more market penetration, to seize a market opportunity that exists in front of them. They need to make sure that things like privacy, data security, encryption, software development, data transit, data storage, etc., all of that stuff matters, right? Digital sovereignty is a huge deal right now. And cybersecurity underpins so many of these factors, so many of these elements, but we haven't fully gotten the credit for it that we deserve because to some extent, we've accepted those sayings. Cybersecurity is not a core competency. We're not a security company. We're a company that makes widgets. We're a company that builds software. You can't sell that software if you're not secure. If you're making widgets, you're probably part of just-in-time manufacturing. There's all sorts of interconnectivity from a data and application perspective in that world. You're not going to be able to connect to each other unless you're secure and you can provide that. So this is a part of how we're directly contributing to it. Now, the way that you can take all of that information about how important cybersecurity is and the fact that we directly contribute to revenue, you can roll that in and use it to start winning every single budget battle that you ever face. And I'm going to walk you through a step-by-step guide to success that will help you understand how to do it. Now, I'll forewarn you, it does take some time. It does take some effort, but it's entirely worth it once you roll it out, once you start to perform it, because it changes the kinds of conversations you have internally with the rest of the organization. And it also changes the allies that you have throughout the rest of the organization, because you can start making business decisions about cybersecurity. Not security decisions about cybersecurity, but actual business decisions about cybersecurity. So let's walk through exactly what this methodology looks like. It's pretty straightforward, right? What you need to think about is that all of those, and I'm going to mention one of the worst parts of cybersecurity for those of you that are involved in it, but all of you probably suffer to some extent through an absolute avalanche of third-party risk management questionnaires. All right. Remember, you're going to rate the session, but don't rate me because I bring up bad things. I'm just telling you the truth. Going back to that transparency we just heard about. We've all got to deal with those questionnaires, right? They're painful. They're annoying. We send them to each other, even though we don't like them, but they're important. But I am going to show you how those questionnaires can start to be the thing that you use to unlock how cybersecurity contributes to revenue. So they're going to serve more than one purpose, right? This is how we're going to do it. The first thing we're going to do is we're going to take those third-party risk management questionnaires. No, not all of them. If you have plenty of time, sure, but none of us have plenty of time. So we're not going to do it with all of them. Instead, we're going to take some of them. Maybe it's just the top 20 TPRM questionnaires you get from the top 20% of your customers, right? Something like that, because if you operate with the 80-20 rule, most organizations do, those top 20% of your customers are going to be responsible for 80% of your revenue. So just by taking a carve out of those questionnaires for your most important customers will get you started, and you identify which of those have requirements for those security controls, right? Which ones actually want you to have a specific security control. And then you quantify the overall current contract value or lifetime customer value of those customer relationships. Right? So of those 20%, how many want you to have multi-factor authentication or phishing resistant MFA or PIM or PAM or pen testing or whatever the control is? You pull that out, then you look, how much is this customer worth to us as a business? How much do they pay us on an annual basis? And then you link those spending allocations to all of those controls. Because the goal here is to show how these customers are asking for that. And then you total those items up separately as reasons for security spending allocations. Because here's what we all know. We're not sitting around adding controls to our environment, adding new technology we have to manage, adding new vendors that we have to interact with, field support tickets for, submit support tickets to. We're not doing that because we're bored, right? We're doing it because we have to, because we know that security is important, but we're also doing it because our customers are mandating it of us. And that's the part that we're missing out on. That's the part that we're not using enough. So the way to take all of this from a customer methodology perspective, I'm actually going to walk you through 3 different methodologies to use those 3 inputs. But just from a customer perspective, you identify the number of customers that require a control. You capture the revenue from those customers. You look at the amount of money that you're spending on those controls, and then you start to create some metrics, some dollar amounts. What's your spend per customer? What's your spending on security per revenue? How much revenue is at stake if you don't have these security controls? We often spend our time talking about cyber risk quantification, and I'm not going to sit here and tell you that CRQ doesn't have a place. It absolutely does. Risk is the language of business. But there's a better way to talk about risk most of the time, because when we talk about risk, we're often doing it to people that are deeply experienced with risk management, right? These are people that have made decisions about risk that make the decisions that CISOs make about risk look kind of elementary. They're pretty basic. So instead, we've got to start thinking about trade-offs. Yes, I can sacrifice our security posture if we're willing to forfeit potential revenue. Yeah, I can forego that budgeted item for this year, but I do want you to know that 23% of the customers that entered our pipeline for a deal, not customers, prospects, I should say, the prospects that entered our pipeline for a deal, when we got to the questionnaire portion of the engagement with the sales team, 23% of those opportunities asked us about the control that I budgeted for. We didn't have it. We didn't win some of those deals. So yes, I cannot budget for this item. We can choose not to do that project, but I do want to let you know that a bunch of our prospects were pretty interested in that. So the trade-off that we have to make is risk deals to forego that security control. When I mentioned some of those allies earlier, wouldn't you much rather, instead of fighting that battle with the CFO as you and the CIO together are trying to figure out what part of the tech, wouldn't it be much better to be able to phone a friend and say, hey, Chief Revenue Officer, are you comfortable with about a quarter of your deals being at risk next year because we don't have a security control? Yep, that's a real different conversation. And it's got nothing to do with security. It's got nothing to do with risk quantification. We're talking revenue. We're talking profit. We're talking executives not making their numbers because your company chose to not do what it needed to do from a security perspective. That's compelling stuff. So let me show you exactly how this works. This is how you win. Kind of mentioned it before, but I'm going to walk you through it now. Also, don't get mad at me. We're going to do a little math. I'm sorry, but I want to prove to you that it works. So we're going to do it. It'll be quick. It'll be pretty painless. Don't worry. It's pretty simple. I did that for myself too, because I've got to present it. I don't want to get the math wrong. All right. So I mentioned X number of customers. Let's use one of those examples I mentioned, privileged identity management, right? PIM. By the way, I don't cover identity. I don't actually know anything about it. It's kind of scary to me. For those of you that do, kudos, 2 thumbs up. Literally, some of my busiest colleagues are people that focus on identity. So more power to you. X number of customers require us to maintain privileged identity management. Those customers contribute Y amount of revenue on an annual basis. And that means that those PIM solutions are responsible for Z dollars of our cybersecurity budget. Now, remember, the defense for this is not talking about what they make as part of your cybersecurity budget. The defense for this is talking about this in context of spend per customer, spend per revenue. How much revenue is at stake for this? Now, I mentioned those other 2 items, right? The cyber insurance methodology. Well, our cyber insurance policy requires us to have email security. You know, our revenue pipeline of RFPs and prospects require us to have cyber insurance coverage. They ask about our cyber insurance as part of an RFI or an RFP or a bid process for new business. Or our partners ask us about our insurance coverages before they'll sign a deal with us. So that means that we need to have this because our cyber insurance payouts are at risk. Our partnerships are at risk if we don't have that. And finally, the regulatory methodology. If your company wants to enter new markets or focus on a brand new vertical like financial, which is heavily regulated, how many customers do you expect to get from that particular vertical that have those specific requirements? How much revenue is your organization targeting or basing its business plans on in the next quarter for the next year? To meet those obligations and those requirements, you've got to have these security controls or it's going to eliminate access to that revenue. That's how you're justifying it. So you can break down your spend for controls by regulation, by vertical, by business line, or the revenue that's at stake without those particular controls. This is what the business, right, in air quotes that we often talk about, this is the kind of number that they're using to decide to expand into a territory. It's going to cost this much, but we project based on our simulations, based on some math, that we're going to make this much money, so it's worth it. You've got to be a part of that math too, and you've got to present your security program in that context. So let's use real numbers. Let's just kind of go here. These are kind of examples from organizations I've worked with historically. So that control we mentioned, privileged identity management, 330 customers require that on an annual basis. It's around $250,000 to buy that solution and maintain it. That means our cost per customer is about $757.58. Now that number, that's out of context. Okay, that's all right. But then we've got that control for PIM. But here's the thing. Those customers, what they pay us is about $24 million. That's how much money we make out of those 330 customers that require us to have that control. Our annual costs are $250,000. That makes our cost per revenue, that 24 million, 1 cent. 1 cent. It's 1 penny. That's what it's adding. 1 cent. So that control PIM puts revenue at risk of almost $25 million if you don't have it, because in those third-party risk management questionnaires, every single one of those 330 customers required you to have that control. You had to verify and validate that you had it, right? They were interested in that. They may not have done business with you without it. So think about it in this terms, right? Of that $75,000, because that's what 330 or 24 million divided by 330 is about 75K. $757.28. Now, this graphic probably starts fights, so don't use it. It's not a particularly politically savvy graphic. If you're not winning that budget battle, I wouldn't necessarily recommend using this one, but I do want to point out that that's only about 1% of the average cost of that customer, or the average contribution to that deal size of that customer. The reason why cybersecurity is a core competency, the reason why we're a profit center, is because we have failed to verify, validate, and present the data that cybersecurity should just factor into the cost of goods sold. The same way that the sales team does, the same way that the marketing team does. All of those, we're a part of the enterprise. And if customers are asking for it, then that means that we have to be a core competency. Doesn't mean we need to do everything in-house. Doesn't mean that we can't outsource. Doesn't mean we can't use services providers. It doesn't mean we have to be experts in everything, but it does mean that we have to treat cybersecurity like it's part of this. Security, compliance, privacy, they're part of the cost of doing business. And we have to make sure that we demonstrate that and we show it. You and your team are doing this work today. You're answering all those questionnaires. You're running those controls. You're making sure that things are okay. Are you and the team getting the credit? You're not. And I know you're not, because that's what spurred my research 3 to 4 years ago when I started working on this and starting to beta test it with various clients. So let's talk about how you can get some of that credit. And for this, I'm going to take us through a dark and scary place, a trip through marketing and sales land. Anathema to the security folks, right? And sometimes we don't even like that much because we've got vendors we have to deal with and their marketing and sales teams are talking to us and we don't even necessarily like that. So I'm going to walk you through how we can take some of their numbers and use them for ourselves to show how we're contributing to things like the pipeline. So it won't be that bad. I'll give you some examples of some existing marketing metrics. This is one of my favorite parts about my job working at Forrester. I work with people that cover marketing. So I can go to them and say, hey, what are the really cool marketing metrics out there? What are people using? This is the stuff they're using. Things like increases to customer acquisition rate, the sales pipeline generated, contributed to by events to the marketing team, improving the customer onboarding process, right? Decreasing the time to onboard by a certain %, reducing the website bounce rate, increasing the number of company positive reviews on various websites. These are all things that marketing, customer success, sales, and other parts of the organization use today. Well, if that's how they're talking about their part of the business, let's just adapt and refine those. If there's a metric about increasing customer acquisition rates, awesome. I want a pipeline that shows security's participation in the sales pipeline. So how are we contributing to that sales pipeline when those questionnaires come in before we sign a deal? When we conduct a risk review on a supplier or a partner, we're contributing to that. I want credit for it. Let's track that. Let's start to show of that total number, what are we actually contributing to? Hey, if we can improve the customer onboarding process, let's decrease their time to onboard through use of things like customer identity and access management. Decrease that abandon rate, the registration rate goes up, et cetera. Reducing the website bounce rate. Maybe the click-through rate for the privacy policy goes up because we make it front and center on the website now. Maybe that happens. Maybe we establish a trust center and that makes that third-party risk management process even easier. What if we have increasing the number of company positive reviews because we've decreased the amount of fraud that customers experience by a certain %? All of those are within the realm of possibility if we do it. And there's your methodology. Talk about that TPRM and product security. Use things like SIAM. Obtain the website metrics through the marketing team. Develop and cross-reference fraud metrics and customer sentiment so you can show how you're contributing. Because imagine this board meeting, budget cycle, or even your annual review. The cybersecurity team was directly involved in $10.4 million of closed business in Q3 of last year. That's pretty awesome. We decreased the time to onboard by 11% by deploying a SIAM solution. 9% of new monthly active users viewed the privacy policy before signing up, an increase of 23% because we moved it to the landing page. We increased the number of positive reviews because we reduced the amount of fraud customers experienced via the addition of MFA or phishing-resistant MFA, saving the company $2.1 million of productivity, headcount, labor, claims, disputes, etc. All of that stuff is right there in our grasp. It just takes stepping outside of where we are now, adding some things in, and being able to do it. But it's using data that we probably already have, or at least mostly already have. So this is what I want security teams to do. This is why I think cybersecurity is a profit center, not a cost center. This is why I think what we do is a core competency of the organization. With that, I think we're going to open some things up for questions.